Hello, MarketClub members everywhere. Well, it's the 2nd of May. Very excited about that. We start a new trading month, and it's hard to believe we've already had a third of the year just fly by. And we've had some pretty big moves, especially in gold. Gold is up 20% for the year, as is many of the stocks, gold-related minor stocks. But this is ABX. We talked about this on Friday, about possibly being long for the weekend. And you would have gotten long right on the close, somewhere around here, I would say around the 1936 level. It's currently trading around 1936, so it's unchanged, which is good. We want the people who took the 52-week high rule, we want to be exiting this position tomorrow on the opening. So let's see how that plays out. But generally speaking, we still like gold very much. We think it's going to be up for most of the year, particularly with what happened today with Warren Buffett saying about taking the money out of the banks if they go to negative interest rates. That is not a good sign. So people are going to move into gold. I think that's more of a store of a value for a lot of people. But generally speaking, we are overbought. You can see we're way up towards 80. We may see a little bit of a pullback after tomorrow, or even today. We'll just see how that works out. But generally speaking, let's go with the plan. That's to be long up until tomorrow, just on the short-term trade. If you're a long-term trader, you want to stay long, because if you look at this stock, scoop it out just a little bit further, you can see we got long right here on the 7th, which is the same, January 7th at 8.33, and you can see it's doubled for when we recommended getting in. And we've had no weekly signals. You can see the weekly signals, none of them said to get out. So generally speaking, very, very positive for this stock. Looking at crude oil, you can see crude oil has had a nice move up, a little bit more of a erratic move, I should say, because you've seen a kind of a choppy kind of scenario where you have a move where it's up, down, up, down, up, and we come down a little bit. But generally speaking, I think the trend for crude oil is on the all our trade triangles are positive, indicating a plus 90, which is a strong upward trend. We're seeing a little bit of weakness coming into the RSI, but nonetheless it's way above the 50 line, which is a good sign, indicating that we are going to move higher. Plus, we've moved over this area. This is, to me, is a very important area. You can measure really from the lows here, 32, up to, let's say, we'll just call it 42 for discussion's sake, indicating we could potentially go up to 52 on crude oil. So that would be like where our target is on the upside. So still some nice room on the upside in this market, in our opinion, but it's not going to happen in 1 day, 2 days. It's going to happen over time, much like a move like here over time and here over time. So let's see how that plays out. We're looking at June gold, and as you can see, we had a nice move up. This is where we started getting involved right here, and it's moved up dramatically, 1120 to where we are right now, 1295. That's $7,500 for those of you who are counting one contract of gold. But what I like about this, we've talked about this before, this sort of scenario where it was building this sort of triangle to go higher, this wedge, what is called a wedge. It's broken out right here, and it looks like it wants to go higher. So that, I think, again, this is a situation where we're just pacing ourselves, and eventually we'll see this market go high. This is not really super overbought. You can see we're just at the 70, and we actually got as high as around about the 85, 90 level. This is back in the February period, right around here. So again, still some room on the upside in this market. We still think this market's going to go higher for the rest of the year. Okay, this is the Dow, and as you can see, we've had a nice move up. A couple of things we've sort of looking back in retrospect. Here's the double bottom. We talked about double bottoms and pivot points before. There's a double bottom right here is the pivot point. So you measure from this point here, 15.4 to 16.4, gives you 17.4, which is right around here, which is pretty much where we got. And we just got a little bit further. But the thing to look at here is the divergence in terms of this going down, like here, and the price is going up. Not a good sign. Also, you're below the parabolic. You can see this little dotted line right here. You're below that. Not a good sign either. So I think that May could be the month. The old adage, trading adage, sell in May and go away, could well apply to this particular year. So let's move on. Now the Nasdaq's a little bit different picture. You can see here we have a weekly trade triangle indicating you should be out of this market, totally out of the market. We're below the 50 line. Not a good sign. This is a market that seems to be rolling over. And if we scope it out just a little bit further, you can see it's had a history of moving higher than swinging low. And if you just look at these, what we call cycles, we're sort of due for a cycle high. So this is sort of how it goes, like this. And I think we're going to have another move down, particularly with the weekly trade triangle indicating exit this position. So again, the negatives I see here is the weekly, the RSI, and the parabolic, all of which are negative right now on the NASDAQ. This is just the NASDAQ. It's not the Dow. It's not the S&P 500, so it's the NASDAQ. This is a 3-month chart of the S&P 500. As you can see, it's still a positive. We have a 65, which is more of a trading range as opposed to a strong upward trend. We are below the parabolic, and look at how we just bounced off the 50 line. This is a key thing to look at. If we go and close below the 50 line, that's a strong indication that this market is, in my opinion, rolling over to the downside. So this is what we would see in the market. It's sort of rolling over like this. But the 50 line, this is what I definitely want to watch, and I also want to watch the weekly trade triangle. If we go below the weekly trade triangle, I think that would not be a good sign. That would be around about 2050 level on the S&P 500. I'd watch that very, very carefully. So again, it looks to me that we're seeing more of a sort of cyclic period, and as I said earlier, it's May, and I think you want to be careful. I don't know what it is. There's something in the air that just tells me that this market's not going to go higher, but again, we have to wait for our signals and be disciplined before we get super negative on any markets. Hey, I'm Adam Hewison. Thanks for watching today. Let's have a great May, and I'm hoping that we have some great opportunities in gold and crude oil and, of course, the equity markets. And if you look at some of the major names in equities like Amazon, Google, it's a mixed picture. It's amazing. Google actually is down. The trend is down on Google, which is hard to believe, but that's the fact. And in Apple, we're mixed in a trading range. So you've got to be a little bit selective in what you're looking at, and we'll do our very, very best to bring you stocks that are trending higher, like the gold miners and gold itself, and some other ones as well. So I'm Adam Hewison. Thanks for watching. Have a great trading day, everyone. I'll be back tomorrow.